Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after the market gets the awaited release of the FOMC rate decision, the Australian dollar plummeted from the 76 handle and stabbed at the objective of 75.1525 after printing a low of 28. From the rebound, the market is still holding to a negative sentiment, and I do believe that we are looking for a further breakdown in the Australian dollar. Therefore, from the technical implications, firstly from the RSI under the midway point of 50, and also with the MACD also breaking down nearly through the zero threshold, is that the stochastic is also supporting my view that the fact that we will most probably get another challenge of 75.1525 in the next day or two, with a pattern breaking down, could even be today. As widely expected, the Federal Reserve did hike rates by 25 basis points this morning after its June meeting, and as widely expected, is now suggesting that there are two more. My view has been pretty much of four rate hikes for this year. So with the Fed coming out this morning and putting to the fact that there is four now on the cards, is that to the Fed's so-called dot plot, which tracks participant expectations for interest rates, the members now feel that four is in need due to the fact that from the statement is that the market is citing more positive to economic growth and higher inflation expectations. So therefore this should, as I say, keep the view for this year for 4 instead of 3. But as I mentioned, from a technical point, I am bearish on the Australian dollar. I don't feel the target is at 75.15. I think it's more lower to 74.55 eventually in the broader picture. The bears are still expected to gather around the 76 handle, with the 60-day moving average also seen roughly just above there. With the dollar index rallying briefly to 94.02 overnight, it did drop back to 93.50 and does put a little bit of concern on the euro. I expect to see any challenges towards 118.5 to fail, with the broader picture still holding down towards 116.90. Now later today, the market will turn to the ECB rate decision. It is expected that the statement will be the most important part of tonight to see whether or not the ECB is starting to unwind its QE. If so, then this could actually see a bit of a whipsaw price action at current levels. But overall, I still expect to see the US dollar maintain its gains, eventually rallying beyond 94 and up to 95, which should in turn see the euro lower. A little bit disappointing for the dollar yen as it stabs at the 110.50 level and rejects it quite clearly. From the rejection, I'm looking for a pullback, but in the short term as an opportunity to buy. From 109.55, I expect to see a rebound and the market take on the challenge to 110.5 and look up towards 111.15 and reassess from there. It is assessed that since the pound rejected the level of 134.5, that further risk is to the downside. And I do expect to see the target eventually come into play at 132.70. Any advances is a sell opportunity above 134, which we aren't too far away now as we trade at 133.70. But nevertheless, from a technical point, it is bearish. The gold outlook is still relatively bullish, I believe, after rebounding once again off the lows of 88. From 91, the market rallied back to 1,300 this morning before dropping back just slightly. I still feel the dips are a way to go to buy, as the overall outlook should eventually see the market test up towards 1,367 and maybe high to 1,324. What is interesting is that some news from out of the US is stating that the North Korea and US situation is now easing quite considerably after the recent confirmation from the State Secretary Mike Pompeo, who said this morning that after one day since the meeting between President Trump and leader Kim Jong-un in Singapore, is that they're looking to completely denuclearize the Korean Peninsula by 2020. But the market is still very much a little bit tense because it's a little bit confusing in what's coming out of this meeting. Nothing is actually being sealed in terms of what can to moving on from the meeting. And what I mean by that is that the credibility of that claim that under the deal, the North Korean retains its nuclear warheads, the missiles to launch them, has not agreed to any specific process of removing them. So the market will be keeping a very close watch in what's been said. But Trump at this point has still not risen or taken off any sanctions on North Korea until he believes that all the weapons have been removed, or the menacing weapons have been removed, as he put it. So I still feel that gold will continue to be a safe haven demand. So this base forming from 88 should continue to hold, and expect to see any return there to be on a bullish rebound. The silver is looking very much bullish, and since the break in towards the $17 region, could still look up towards $17.05 to 15 as a potential target. It did stab slightly to the high side this morning of 17.10, so quite near the highs of April, but nevertheless the market to me is trending, it's bullish, and I do expect to see further tests to the upside. And riding up with oil, well, the market did take a daring challenge towards the upside of that resistance, which was once support on the broad trend at 66.80 figure. I do expect to see this to cap, and any challenge there to fail. Overall, from the bearish flag and also the break of the broad trend, does give me a target of 62.40.80. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.